Good evening, everyone. Can you all see my screen and hear me? All right, perfect. Thank you, Don. All right, let's go ahead and get started. This is the weekly Stock Waves Beginner Circle, or not Stock Waves, sorry, weekly Elliott Wave Trader Beginner Circle webinar. The purpose of the Beginner Circle webinar is primarily to help newer members get acclimated and understand some context and answer some questions on Elliott Wave and using the various site platforms that we have. There's some really good questions that are starting us off in the thread. You guys can use the GoToMeetings questions box or the link thread on the main EWT site. Those are the best places to answer questions. I can't really look in more than those two places at the moment. We do often go through some of the broad market index charts and then get into some of the commodities and things as part of our normal webinar within whatever we can fit in within the hour. But questions regarding, newbie type questions, not just what's the market going to do next, certainly take priority. And we'll try to answer those questions as they come up using the charts that we're looking at, or switch over to those charts or hold off till we get to them. So JP starts off asking us about the MACD oscillator. That's this indicator that I have in the bottom of my charts. I also have the RSI and I have a stochastic. JP, my settings are the same as yours. It's using the EMA 13, 34, and 8. I'm not an expert in MACD, but the way that this is set up is that my moving averages and my Bollinger Bands on my charts, Garrett helped me set that up. So those simple moving averages and the Bollinger Bands on daily and all time frames below daily are the daily Bollinger Bands and daily moving averages. And the blue right here corresponds to the 50 simple moving average. The green is the 100, and the red down here is the 200. And then these gray squiggly lines that make an envelope around the price are the upper, middle, and lower Bollinger Bands. So on any of my charts, unless it's larger than a daily, those are going to be the daily values. And I think it's important I don't have those change. The MACD, RSI, and stochastic does change based on the time frame that you're viewing. So JP's question was that there was something unique about the weekly MACD that doesn't seem to be kosher, or maybe that looks a little bit more in line with, said November 2018. Oh, in terms of a possible November 2018 was back here. This is a possible B wave consolidation inside our fourth wave before we got either the B wave inside the A or W if we're counting this as an expanded flat, or the B inside the fourth if we're counting a fifth, and then the larger primary wave 4. In terms of similarity with the MACD at the moment on the weekly, I don't quite see a lot of similarity. I think this could, is consolidating a little bit on the weekly, and this might be where we start to see the weekly fade before it gets another push up that gives us some weekly divergence. That's one of the main things that I look for using MACD is, I kind of look for a gradual consolidation that allows it to pop higher again, and a pop higher but that doesn't make a higher high, creating a divergent top when price does make a higher high. So I don't see a lot of similarity on the weekly MACD in terms of the price structure from back there in November 2018, unless you're talking, I don't. Yeah, I definitely don't see it. November was actually the beginning of more of a B-wave bounce. But those are the time frames that I use. All right, so let's go back and let's talk a little bit about the setup that we're seeing right here. Oh, and Bull Spread asks about a Pirate Ninja. You guys may see I tend to use the blue a lot. I might see a blue arrow like this on my chart, where I will take a measured move off of a significant low, and instead of applying a specific wave label, I'll look for a clear corrective consolidation, and then I'll draw a pirate ninja, which is basically just a silly way of saying measured move, off of that low, saying it really doesn't matter how you label this, whether it's a 1-2 or an A-B, or maybe even a 3-4. Here's your potential for a measured move off of what looks like a clear consolidation. So I'll do that a lot for potentially bullish moves, but I'll make them blue versus green when it's not clear if it should be a C wave or a third up. And then I will also tend to post them a lot when there's a potential setup for a C wave down, where we have an initial move, we have what looks like a corrective bounce, and we have a setup for a C wave pointing lower. And we'll come back to this in just a moment. But that's the gist of the Pirate Ninja, is the setup. We tend to say that most of our third waves are going to exceed wave 1. And most of our C waves are going to tend towards equaling the A wave, being a 100% extension, or possibly a little bit more than that, although less is valid. So since most of the moves that we look for tend to be a 100% move or more, when you see a clear setup of what looks like a corrective consolidation, then it can set up for that measured move. So those are just a good, quick way of showing where something points to with a good amount of probability. The other thing that you asked about is where I have on my chart this 2 versus 1 or A versus B. These are local fib tools. If one were to use the regular extension tool for LA wave extensions, or a bunch of tools for retraces to measure all of the different fib levels, your chart very, very quickly gets cluttered up, and it gets harder and harder to see things. Even if you make these all different colors, it still gets very jumbled. So instead of having a whole bunch of lines going across the chart that make it very difficult for me to see the actual candles of the price pattern, I use MotiveWave has these localized fib tools. So I can say, instead of drawing a big purple retracement tool that gives lines all the way across here to tell me what the fibs are for a possible retrace as this wave 2, I can just use that Fibonacci tool here to tell me where the ideal fib retrace levels are. And where it says 2 versus 1, that just means this is the Fibonacci retracements of wave 2 versus the measure of the labeled wave 1. And the same thing, but for a 3 versus 1, or a B versus A, or so forth. And then the next question we have is looking at a chart with a possible 1-2, then using the fib extension tool. So Microwave, we'll get back to your question in just a minute. I want to talk a little bit about the structure that we have so far in recent price action. Kathy, I'm sorry if the sound is not very clear. I did move into a new office, and I do not yet have any rugs or much on the walls, so there could be a little bit of an echo. But I'm using my blue snowball, and it's supposed to cancel out a lot of that. It's called a blue snowball, but it's actually black. Anyway, okay. So I have a couple of yellow diamonds on my chart of things that I wanted to talk about. But I'm going to zoom out a little bit like we usually do. And I did mention it. Let's zoom out a little bit further. So we're still working on the premise. Just going to clean this up by making this a dashed line. Of a primary wave 4 bottomed in March. So that's going all the way back to the March 2009 low, where we have 5 waves up for primary wave 1, and then those are yellow fib extensions. And then we have 1, 2, 3, 4, 5 waves up for primary wave 3. There is some debate on, on some of my charts, I'll show the primary wave 3 counted here and a higher B or an X wave here, and then the C wave down. So we have an expanded flat for the primary wave 4. And on some charts, I've left it where this is an extension of the primary wave 3. For our purposes, that really doesn't matter because both of those end up with the primary wave 4 being right here and still looking for a very extended move for the primary wave 5. So inside that primary wave 5, we've been working off the assumption that we are still early on in a very extended move. Either we have a 200% extension that was hit here for the extended 3, so easily could see 2382 or 2618 for the primary wave 5, or if we count this as the expanded flat, then expanded flat means that the underlying trend is very, very bullish, pulling this to the upside. I think that is counted this way on what I have labeled as Alt 1. Alt 1 is just the tab that I use to have these other indicators that I've talked about before, the PSAR and the iClouds. So anyway, going back to the primary tab. The expanded flat basically just means that the underlying trend is very, very bullish. So it skewed the corrective bounce inside the primary wave 4 to a significantly higher high. And then we got the strong sell-off as the initial COVID effect on the market. And since then, we've been very, very bullish. We were looking for a more reliable intermediate degree wave 2. So the count that Garrett and I were working with off of the low initially into the June high assumed 5 waves up as a leading diagonal and looking for more of a retrace. Typically, after a leading diagonal, you will have a pretty wide and or deep retrace, at least to the normal fib zone. And our normal Fibonacci zone extends from the 38.2% to the 50% to the 618%. So the move that we got down, I'm going to make this a little bit bigger. The move that we got down in June looked like a very, very good initiation move for the A wave in the start of a wider intermediate degree wave 2. And then we got a strong bounce, which looked a little bit too strong to beat all of B wave. So we were kind of skeptical of this starting the C wave down here and looking for a wider flat for the B, and then a potential C wave down, one of those yellow measured move arrows, down closer towards the 2800 region would have been a pretty reasonable wave 2, even though that still would have been on the shallow side for an intermediate degree wave 2. When it started to break out, now as we're going to zoom in and talk about these diamonds, we had the possible corrective bounce as an ABC up for the B wave, and this is the yellow count that we were looking at that time. Wanted a C wave down towards here. And once we started to take out, I left these purple lines here as the possible resistance region that we are focusing on, because we did have a possible initial move down off of that high. And once that prior high was taken out, I said technically a B wave is still valid, but it made this potential much less likely. So the count that I moved to at that point was looking for an extension of the wave 1 as this counting as a 4th wave, and then getting a 5th wave up as wave 1, and then getting a new ABC correction for wave 2. So that's where we were back in the middle of October. We had an initial move down from that possible Alt 5 of parentheses wave 1, and what looked like an A wave and a B wave bounce, and got a good substantial part of this measured move down as the C wave in what I have labeled here as the purple wave 2. We looked like we should have been holding in the 3330 to 3370 region as a fourth wave and getting one more drop in a C wave to more cleanly complete this pattern as a more reliable wave 2 at that larger degree. The issue that I have, I mean, there's issues that I have both ways of counting this. The main issue with counting all of this as wave 1 and whether this is a shallow wave 2 or even if it needs to come back down as a wider wave 2, counting this entire move up as 1 pushes the fib extensions even higher towards the 6,000 level for just the parentheses wave 3 based on normal fibs that we would expect. So counting this as being further along, even though it relies on a very, very shallow wave 2 that didn't look very complete, whether you count it as a running flat, which I think might make a little bit more sense here, or whether you count this as the actual wave 2 low right there, is very hard to rely on this initially. But based on the price structure that we have, so that was problem 1. But I think most individual charts did get more of a consolidation, either here or coming in here. And we're going to look at the RSP in a minute. The other slight issue that I have with that count is that this as a wider expanded running flat, or not expanded because it did make a higher high, but a running flat because the C wave here did not make a lower low, is larger both in magnitude and in size and duration than what we're counting as the wave 2. So I do like it moved over just a little bit to kind of make that a little bit more equal in terms of this took most of a month, this took 2 months, but kind of the same magnitude and a bigger flat as a running flat there. But I think anyway we're looking at this based on the higher high that we had here in February and all of the individual charts, we have a very, very bullish setup. The only alt, and we'll take a look at that on the Nasdaq chart that I can really think of at the moment, is that maybe this is still an A and this is actually a B wave, an ABC up for an alt B. And at the worst case scenario at this point, what I could see is maybe an attempt at more of an expanded running flat still for this wave 2 over here. But so far, when we zoom in a little bit more, we got over the resistance level for this to have been a fourth wave and get one more drop in the C of that wave 2 that we were looking at earlier. And then it turned into what looks more like 5 waves up. And on a lot of individual charts, this really does look cleanly like 5 waves up in a very impulsive move. And so far, we do not yet have a 382 retrace. Doesn't mean that this can't be all of this wave 2, but the normal expectation would be for a little bit of a deeper wave 2, more into that target region. And the move that we've had up the last 2 days, and when I do zoom in on a smaller degree chart, I do tend to look at the 5-minute or the 3-minute. I know there was a question about that from Manny. Let's see. Let's go to the 5 minutes so we can see. You guys will notice what the time frames that I like to look at. When I'm selecting a time frame, I want to see as much detail as possible, but also provide some context. So that's the factor that I use the most in terms of trying to determine what time frame to show you guys and what to look at myself, because I want to see. So a 5-minute here allows me to see the 5th wave up inside this wave 1, the initial ABC down, which came pretty close to a 382, but not quite, and what looks like a wider flat into the normal resistance region for a B wave. It might still try and stretch higher towards the 3580 or even 3610, but easily counts as complete in the ABC up as a slight expanded flat because this made a little bit of a lower low. So that gives us a possible measured move down towards the 50% retrace region in the 3450 to 3430 region would be an ideal spot for this move to find support. So it does not look like 5 waves down as the start of this yellow measured move. So that's why I don't even have that as necessarily as an alt. And again, I say it a lot, but all of the charts that Garrett and I look at in stock waves are all very, very exceedingly bullish. Some do have room for some lower levels of consolidation. It wouldn't break and invalidate the charts, but a lot of them do have very, very strong potential for a more accelerated count off of that recent low that we saw. So that is what I'm following the most. If it fails to hold the 3380 region, then maybe we are going to try for a bigger retrace. So I'm focusing more on trading those individual names and scalping the smaller degree setups and using for a little bit of extra juice using the index charts. I'm going to jump over to, I do want to show you guys a view with the ideal projected subwaves. I think if we move that wave 2 over a little bit, then it gives us a reasonable target here for the 1382 extension and a little bit more reasonable here at 4430s for the 100% extension where the 3 of 3 should target. And then this can probably come based on its own. That looks pretty good. And we'll add the pips here for a second. So right around the 4,000 region would be ideal after that retrace. Now, I did want to contrast this with RSP, but first I'm going to answer a few of the other questions. Okay, so Microwave was asking, when you have a 1-2 at some degree, and then a smaller degree 1-2, where does it stop being just a wave 1? And so that is based on the Fibonacci pinball that we use. So I'm going to hide the fibs here. And we have, these are our extensions for the parentheses wave 3. So we'll just use that degree at the moment. So our normal Fibonacci pinball target for the minor degree wave 1, that's this 1, 2, 3, 4, 5 inside of the parentheses wave 3, is going to say the 382, the 0.50, or the 618 are going to be those ideal targets for wave 1. And we can see this wave 1 came just shy of the 50, and then we have a nice corrective consolidation. And then our third of third should target the 100% extension, and then the 5 of third should target the 1382. And then we can do that the same thing again inside. I'm going to go to the 6 hour so that I can hopefully see all of that on the same page. All right, so here's our wave 2, and we can draw our fib extensions for the wave 3. We can see for this to hit the 100% of the parentheses wave 3, it's going to need to get to its own 178.6, but that's fine. So this got a little bit past the 618. It didn't get over the 76.4. So that's kind of the pivot. 1618 is usually the further extent that you want to see the wave 1 inside your third head to. A little bit of a spike over that and then a turn down into consolidation for the wave 2 is fine. Once something crosses over the 764 with any kind of strength, so if this had gotten over 3712.50, then it would be less likely just a wave 1 and should hold higher support as it would continue towards the 100% extension as this 3. At this rate, we're looking for further extension in this wave 3 here, closer to 4135, based on this holding that 3440 region. All right. Jay asked about the blue dots. That's on the PSAR. Those are kind of just a momentum. We can look at that very, very briefly. Try and look at it in a little bit of a larger degree. So those just show you a shift of momentum. Basically, when price gets through whatever dots are on top, then you have dots on the bottom, and that gives you a support level as you can continue higher. Once those breach, then you get your top dots, and that can act as resistance. So you can see how those they work after you establish top dots or bottom dots. Then it uses some moving averages or maybe exponential moving averages and maybe some other math to kind of fade along with price. So you can see those kind of come down as your price is moving there. So we're still under that on the 4 hour. More reason why we can treat this as resistance for this possible B wave, setting up for a possible C wave down in a deeper wave 2. And we have that on the 5-minute chart. So I think that's the biggest risk at the moment in the short term, is that this looks corrective. I did want to contrast that with the Nasdaq, and we'll answer some more questions. And then also wanted to look at the RSP. The Nasdaq is much harder to count this June consolidation as anything significant. So it does look like it needs to either be the ABC for the intermediate wave 2 here, and this is a 1-2 start to the third, or it's further along and this was some degree wave 4. Again, you do have that alt B wave, where instead of this being the B and this just not getting the ideal 5th wave down for a more complete C wave, it completed as a running flat, so the C wave didn't make a lower low. But you do have a very impulsive looking move that counts nicely as 5 waves up and a corrective retrace to a 618. So ideally, Nasdaq is ahead of the S&P and trying to turn up in the next move. Well, it's ahead at off of the more recent low that ideally counts as a wave 2, but actually should be behind where the S&P is the smaller degree 1-2 inside this 3 already. So maybe Nasdaq can manage to rotate itself around and get more of this 1-2 off of that low, while the S&P tries for that C wave of the wave 2. So Mike, hopefully that answers your question, that it is a possibility, but for both on the Nasdaq and the S&P, but I'm not seeing it as the highest probability. Most things got way too high over these prior tops in terms of individual names to reliably count them as just a B wave. Many more things look clearly further along into the start of the third. You want to look at RSP and try to work through some of the other questions. Okay, so Ernest says, how important is the degree of the wave 2 as a trader? Right. So, that's one of the reasons why I went to talking about things as far as like a pirate ninja, because the academic nomenclature in terms of whether this is the parentheses wave 2 or this is the parentheses wave 2, for most people trading, the important thing is that we have what looks like a 1-2 setup off of that low starting the next big move. We can sort out in terms of balancing the equation. You have to have 5 waves of equal degree inside your primary wave 5. So if we look like we are here, then we'll say, really, it looks like, if we're counting it this way, then it looks like we need another 4 or 5. But if we are further along, then maybe it can be completing a little bit sooner. So that's a question for more of an academic nature further on down the road. At the smaller degree, here looking at the RSP, this is an equal weight version of the S&P. It really doesn't matter if we're going to count this as a running flat for the larger parentheses wave 2, and this is a 1-2 start to the parentheses wave 3, or it's a 1-2 start to the 3 of parentheses wave 3 already. The important thing for most traders is to recognize that we have a nice running flat. We have an impulsive looking move off the low that fits with a lot of other charts being the start of a third. And we are looking for ideally a little bit more of a consolidation into the 116 to 112 region on this chart to fill out more of a reliable wave 2. But we're already, certainly any move over this prior high, can be off to the races pretty quickly. I wanted to pull up the RSP because it did make a lower low later in June. So this consolidation here that looked like a very compressed running flat where the move down here made a much higher low than the initial move down in June. In RSP got one, it did make a substantially lower low. It looks like it filled out much more as an ABC. And that lower low got closer to a 382 retrace and hit the 150-day moving averages as it was already under the 200. So that, I think, argues a little bit more in favor of the 1-2, 1-2, and now another 1-2 in process off of the low, still with a lot of meat on this bone for the larger primary wave 5. Anthony asks about measuring the fibs inside of a diagonal. A diagonal is very similar to an impulsive move. I thought maybe this might count as a diagonal. The main difference in terms of fibs, that's where all of the subwaves are ABC moves, is that your wave 2 is usually going to be deeper and wider. This, I think, counts fine as an impulse. It does not need to be a diagonal. But just looking at that as an example, your wave 2 would usually be wider and deeper, and then you get an ABC move up for your third, usually to a 100% or a 1-2-3-6 extension. Sometimes they do go to a regular 1-3-8-2 or 1-6-1-8, just like any normal fib though. So usually it's more about the structure than specific fibs. Anthony says B is usually, 618, technically 0.5 is valid for a C wave, but most C waves tend to be closer to C equals A, with on the shallower side of that, a 764 would be more reasonable than a 0.618, although both are still valid. Ryan left. Aaron, I think the comparing risk reward, I mean, the IWM and Nasdaq are more volatile, are more volatile than the S&P usually. My concern with the Nasdaq chart though is that this is less reliable as a 1-2 because it is so shallow, and it already got so high over the prior third. I trust this count on individual names, which can be, many that we're following in stock waves. We have plenty of names that are projecting more than 100% in the bulk of their wave 3s, but it's hard to apply that reliably to the Nasdaq itself. And I think the same on the Russell looking at the IWM chart. The count is there, but I don't think, there's certainly a lot of small caps that are not reliable. So I would rather follow the individual charts that look like they can propel the IWM to those longer term lofty targets, rather than focusing too much on the IWM itself. All right, Ernest says on the ES, if the C of B up rolled over now, would that be unusual? I don't think it would count as a truncated at that smaller degree. I think we have enough subwaves to count that complete. Thank you, Ken. What are the chances of getting down to the deeper C wave in Nasdaq? I think that's why I put 3 alts in front of the label there, because while plenty of charts would still be perfectly valid, most really do not look like they're set up to head down to this lower low here. So there would be plenty of very bullish buying opportunities, but I'm not holding my breath. I mean, you could say that this being so shallow fits with the S&P, and certainly does. It's just there's a question of valid versus reliable, or possible versus probable. And a lot of things are certainly valid initially, but because they don't fit with the normal expectations and guidelines, it's hard to say to tell people to rely on that as a firm high probability from the start. There's Jewish concepts in Jewish law of lehatchila, which means before the fact, and b'di'evid, which is after the fact. So I think this is the count, but it's not going to end up being more reliable until we get further along. In which case, people waiting for confirmation may end up getting left in the dust. So, right now there's a very, very good long-term risk reward setup in the Nasdaq off of this 11,480s low. If that low breaks, it is possible to hold a deeper version of this wave 2, because that's what looks like the S&P is doing, but it does certainly open up the door to the wider purple alt there for the C wave of 2. Still very, very bullish long term, but I would need to see a new small degree turn up off of that low. And I would really just prefer to see this form into 5 waves up as the wave 1 there. All right, I have a list of all my long-term positions, optimal buy, a lot of charts looking for ABC down. So yeah, Adam, there's a lot of the larger tech stocks that we cover in stock waves are very similar to this. They did get a pretty decent consolidation off of what can count as a larger wave 1 into the September high. And a lot of them also, a lot of the charts that we follow in stock waves did get a more reasonable consolidation that can count as a bigger wave 2 back here, and look even more bullish off of the recent lows. So there's certainly a lot of names that we do have that can support this, even if some of the larger of the tech stocks are not as clear. And there are plenty of things that can just count as, instead of being anything reliable as a larger wave 2, there's a lot of Nasdaq charts where this can be the parentheses 1, 2. This can all be the parentheses 3. This can be the running flat as a parentheses 4. And this is a 1, 2 start to a 5th wave that would still be targeting the 15,500 region, if not higher as well. And that could even get further extension. I try to avoid putting too many different alt labels on the chart because it clouds things. And again, as we just discussed, the exact labels that you put here at the larger degree really don't matter. The important thing is saying, all right, this is a 5 up, 3 down structure. So as long as that holds, treat it as a 5 up, 3 down structure. Matt, I wasn't sure which question you asked me to repeat. So hopefully that answered your question, Matt, in terms of the discrepancies that I am seeing between the Nasdaq and the S&P in the very, very short term. That one, at the larger degree, they can be off by a little bit, and the Nasdaq got to a 618 retrace in this initial move off of the high earlier this week, whereas the S&P only got to a 382. The Nasdaq also looks a little bit stronger off the low compared to the more flat corrective bounce that we got in the S&P or the ES. So it looks like the ES can drop and try and head lower towards its 50%, while I would like to see this recent low hold in the Nasdaq. I think Avi is talking about this C wave down at the smaller degree. I haven't gotten a chance to read through his post yet, but I mean, this should start pretty soon if we're going to get a C wave down, similar to what we looked at with that first yellow, or the second yellow diamond. If this starts to try and turn down and then turns back up strongly over the 3610 region, then it's likely not a B wave, and it can lead to a substantial breakout. All right, let's move over to talking about the metals. Oh, good, I picked the right tab. All right, using this tab because it's a lot cleaner. We have been working off of the assumption that we are in a larger fifth wave of a primary wave 3, and that's the intermediate fifth wave off of the March low. That's parentheses wave 5. And that looks like it is filling out as a diagonal. I can go ahead and add the subwaves here. Shouldn't crowd up the chart too much when we zoom out. But that's where all of the subwaves inside are corrective ABC moves or regular corrections for that fourth. So we did have what looked like a very solid a B wave triangle and a small C wave down into an ideal support for a fourth wave. We did nominally break that low yesterday. So that doesn't mean that the entire count for a fifth wave up, a fifth of the parentheses wave 5 is invalidated. It just means that we have a nominal new low for a more complex wave 4 that has not confirmed a bottom yet. We are still over normal support for a fourth wave inside of a diagonal, and holding, I mean, we're expanding on our trend lines more than ideal, but we're still holding over that support. Can count this probably best now as a WX, Y, X, and Z. So that's a triple combination. It's sort of like a triangle, but it has a little bit more of a downward skew. We do want to see this hold support in the 1840 region here, and the fifth wave up should be an ABC move as well. And that ideally targets pretty close to the 2150 or 2200 region. And then we would be looking for a larger, wider correction as a primary degree wave 4, which can take most of 2021. That does not necessarily mean that the individual miners are going to be so bearish, but they could complete the next move and also need some sideways consolidation. I've talked about before the potential that this could be a very high B wave and possibly even an expanded flat, where we just hold a high support level most of the time, holding well above the 1800s, where the profit margins for most precious metals miners are still very, very healthy. So even though there can be some volatility in the underlying metal, it may not necessarily be ultimately bearish for the miners that are pulling the stuff out of the ground. Now looking at silver, silver has a similar structure off of the March low, but instead of counting as a parentheses wave 5, because it made a lower low in March, it is potentially a wave 1 or maybe something more bearish once it completes this fifth wave up. But we have a very strong, clear consolidation as an ABC for the fourth wave, and so far, despite the harsh drop at the beginning of this week, we have held on to that low as the potential start to our fifth wave up. It is possible that this is an awkward leading diagonal, and we're working on part of the ABC after the leading diagonal. It even is still possible that our green 1-2 start to the fifth wave, which in silver is an impulse and not a diagonal, could still be intact. So this could have been actually an alt A, B, and C of this wave 2, and we are trying to restart the third already. So certainly not yet any kind of cause for significant alarm, even though we were looking for some consolidation. from a possible 5 waves up move here. It stretched higher and then broke that initial support, but has held both the October and September low so far. Moving on to GDX. Let's go to my cleaner. Nope. Nope. There we go. All right, so there are 2 counts that are on, well, 2 counts and 1 alt that are on my GDX chart. The green notation here is for a possible where this was the parentheses wave 1 and this was a parentheses wave 2, and this is another 1, 2 in green, and trying to hold that October low as the wave 2, and about ready to start the third of the parentheses third of the larger primary wave 3. The more reasonable count based on fib extensions that this has already hit. So this is based, this green count here is based on potentials that Garrett and I see on some of the individual names. But there are a lot of them where it does look like this is 5 waves up. There's a possible wave 1, or this is 5 waves up and another 1, 2 off of that. Actually very similar to the overall market. But the extensions that we've hit, since we've already exceeded the 100% extension in this primary wave 3, the more reasonable count for GDX itself in some of the larger cap names is that this is a third and a fourth wave inside that primary wave 3. Lost my primary wave 3 label because I have it attached to the more bullish version. So this would be the circle 3 here. So ideally, off of the October low, we have 5 waves up. Even though we have a sharper drop than is ideal, we're holding as a 1, 2 start to that parentheses wave 5. This can fit with the rest of that 5th wave up in the metals that we've been talking about. And then we can get a consolidation as a larger 4th wave. Fits very nicely with gold. And that 4th wave can hold the high 30s and be a nice expanded flat as well. The alt that I have here, so I don't really consider the green an alt because the green is the same 1, 2, just at 1 degree smaller and implies a little bit more bullish later on down the road, but is still setting up for the same kind of move off of the October low, provided that can hold support. Pretty much the low of the day really needs to hold, in my view. The alternative is a more complex and slightly deeper parentheses wave 4. And that's where this was an A, B, C for this yellow B wave, because this does certainly look like 5 waves up. So we have an initial A, B, C down for an A wave. We have an A, B, C up for another A wave inside this B, and a lower low here, and then a strong 5 waves up. So we can be working on a C wave down, which could target the 32s, or 32 region, as an alt of this wave 4. So that might stretch further into December. I don't have a clear picture here if this is a 1, 2 start and maybe even starting a third, or if this is A, B, C down and it needs a bounce as a wave 2, or if this, until this low breaks, I think there's enough evidence from the individual names and from the metals that we should still give this the benefit of the doubt of trying to hold somewhere in here as the 4th wave. The other thing is that this could even just count as the 5th wave of an ending diagonal off of here, where this is 1, 2, this is the 3 and the 4, and this is an A, B, and a little bit of a small C wave for a 4th, and then we're getting a 5th wave down as that C wave to just a nominal lower low underneath the 35-30 region, and then it starts to reverse very strongly. So it's very, very hard to get too bearish here. And the way that we view it is, Garrett and I took a lot of flack for trimming our positions and looking and calling for a consolidation back here in July and August, We got most of that consolidation and started to initially add some exposure. We did trim a little bit and then have added more with the lower lows that we got in October. And like our exposure, still have a little bit of cash. So if we did get lower lows, we would stop out of a few more recent adds and then look to add those back and then fill out the rest of our positions at that lower low, that we still have this corrective retrace setting up the next move higher. I mean, any asset that is priced in terms of dollar is going to have some relationship to the other comparative value of the dollar. So other than that, we don't, we do say each chart on its own. So I try not to make my investing and trading decisions for one chart based on what another chart is doing, but I do try to maintain an awareness of that. So we could take a quick peek at the dollar. We can also take a quick peek at bonds, and then we should look at oil. All right. So this did not actually make a lower low yet for the possible purple 5 of A. It is certainly possible that this is an A. This is holding here as a B wave, and we could be trying to start a C wave up for the blue B wave here. It might even be a little bit lower if that's the case. And you could even count this, I mean, you could count this complete a number of ways as the A wave. And that, might put some temporary short-term pressure on the metals and miners. But I don't know if this is a strong enough setup to bail on all of your metals and miners positions because you're worried about a possible C of a corrective B wave that could easily truncate and roll over pretty strong. And there is certainly potential that this bounce was all of that B wave in a very, very muted bounce and already starting a pretty nasty bearish move to the downside as a red C wave. So I would be very, very careful, trying to draw too much in terms of correlation, and just treat each chart on its own. XOP and XLE are charts, are index sector ETFs for the energy sector that we do cover pretty extensively in Stock Waves. So feel free to check out our coverage of those there. We have been very bullish setups off of the recent low because most of the energy names that we follow do look like a very nice, either from the June or July highs, or from August or September highs, they look like a nice ABC correction into support. So we did get this wider B wave here, and then it looked like we held into a normal fib extension for a C wave down. What I am concerned with, though, is that in terms of a retrace of this possible 5 waves up in oil, we didn't even get, we only got to about an 11.4% retrace. So that's half of a 23.6% retrace, which is not a reliable fib level for something to be a larger degree wave 2. So it is possible that this is another B wave and that maybe a C wave down could try and take oil back down towards the 30 region. We only have 3 waves up, but both of these look like 5 wave moves. We are very bullish a lot of energy names as long as they hold their recent October or early November lows. I would say you could even be cautiously bullish on crude as long as it holds the 37 level. If this 37 level breaks, though, you're left with only an ABC up, and you do run the risk of the C wave down. I do still have this colored in green because I think that this can actually still be very, very bullish longer term, even though this would be a pretty nasty move down in the short term, and it might have an effect on some of those stocks that are closely tied to the sector, but not definitively. you can put those energy stocks there, and they do, well, a lot of times they do follow some of the ups and downs in line with ups and downs in crude. The magnitude of each relative move is not always the same. There are a couple of natural gas charts that we are also very bullish, but I don't have anything reliable in the natural gas chart in terms of potential longer term bullishness. It looks to me like this was a three-wave move up. It held a retrace. It got pretty much an exact measured move from our low here. It does not look like 5 waves up yet, so it could get a better 5th wave, maybe towards the 3.6 to 4 region. But this does not look like a significant probability impulse heading much higher. So best case, maybe it tries for another high here before it tries to consolidate again. Other than that, I don't have anything reliable on natural gas. And then real quick, we'll take a look at some of the bonds. The only reason why we cover GDX and the metals is because we cover those in the main market section, but that XLE and XOP are the dominion of stock waves. So we talked before about the potential, and the 10-year Treasury note was holding on to that potential a little bit longer, and still technically has not invalidated it yet because this is the 100% retrace. But it really did not look like it was holding in the bullish setup for this green parentheses wave 3. So we had added this orange B wave back here and talked about the potential for that filling out as a diagonal with a 1-2 setup here and heading lower. The 30-year did break that 100% level on, I think, on this spike. And for sure it broke it on this spike. So I think because the 30-year invalidated the alt wave 2, I think that makes it a very, very low probability for the 10-year for those to be in opposite directions there. So more likely this is just going to continue to head lower in the ending diagonal for the C wave. Which puts the measured move target somewhere in the 135 to 133 region, but it is very, very muted. We can probably get one more drop in a possible C wave for the third, and that's not quite clear if this should be the A or if this should be the A, but then probably going to get a pretty decent bounce in the wave 4, and then maybe makes it down closer towards that 135 region. The US chart is a little bit more happy to follow through to normal levels on the downside, but again, this could already be close to completing this third wave of the diagonal and may not necessarily reach all the way down to that 160 region. And this is much less likely from here, but could retry to start a primary 5th wave up from this 160 region. All right, any other questions that I missed? All right, I think that is good. We got in just under the 1 hour mark. Perfect. Thank you guys. I'll get this uploaded, converted and uploaded, and I'll see you on the site tomorrow. Have a good night.